Hello everyone, welcome to my channel. This video is about lock-in period in IPO. Do you know that the lock-in period is introduced to protect retail investors from possible losses? That is true. As part of this video, we'll discuss about what is lock-in period, what are the different types of lock-in periods, and why the lock-in period introduced, along with how to handle our investments once the lock-in period gets over. Let's start with what is lock-in period in IPO. Lock-in period is a window of time where the major shareholders are restricted to sell their shares immediately after the IPO is listed. These major shareholders include company insiders such as promoters, executives, company employees, etc., and also early investors like anchor investors and non-promoters. Now, this is not applicable for retail investors, where retail investors can buy and sell the company shares on the same day of listing. There are three types of lock-in periods. Lock-in period for anchor investors. Anchor investors are restricted to sell 50% of allotted shares for 90 days. Rest 50% is locked in for 30 days. Lock-in period for promoters. Up to 20% of post-issue paid-up capital is restricted for 18 months. Previously it was 3 years. Now exceeding 20% is locked in for 6 months. Now lock-in period for non-promoters, which is 6 months. Previously it was 1 year. If you want to know more details about different types of investors in IPO, I've made a separate video. Please watch it. Let's understand why lock-in period is imposed by SEBI. Imagine there is an IPO which came up with a lofty valuation and got listed at around 30% premium. Now on the same day of listing, the price started falling down. This can happen when major shareholders like company insiders, anchor investors, they want to sell their shares to cash on the IPO gains. Now, if there is a lock-in period, the major shareholders are restricted to sell their shares, which will protect this certain volatility and also protect retail and small investors from certain losses. Along with protecting retail investors from losses and also providing market stability, this also shows investors' confidence. If major investors are holding the share for a certain period of time, then immediately selling it, that means it shows their commitment towards the stock. Now this also gives a long-term perspective. They are looking at the growth and long-term growth potential of the company than just the short-term gains. Are there any downsides for this lock-in period? Yes, there are. Since major shareholders are restricted to sell their shares, we wouldn't know what their sentiment is towards the stock, whether they are happy and want to hold it, or whether they are not happy and not confident and they want to dump the shares. We'll only get to know when the lock-in period gets over. Often when lock-in period gets over, there is a price fall, and this is because some of the major shareholders, they want to sell their shares to book some profits. Now when they sell their shares, there is a large pool of shares coming into the market. Unless there is a demand to absorb this large pool of shares, the price keep falling. Now how do we handle this lock-in period closures? First thing is we must be prepared for certain potential volatility in the stock price. Second, instead of making any decisions solely based on the short-term price movements, it is important to stay focused on the long-term growth potential of the company and also market conditions. If you are confident on the growth potential of the company, it's an opportunity to buy on dips. Thanks for watching. Please like and subscribe.